The Zacks rank, value, momentum, growth, and income all factor into Zacks rank buys.
Not just growth stocks, but aggressive growth stocks. That's what we're going to talk about with our aggressive growth strategist, Brian Boland, who hasn't been here in a while. It's good to see you again.
Good to be seen.
In all your sartorial splendor.
You know, the market is a little soft right now. We're seeing a lot of red in the stocks, so I figured it was a good time to bust out the
commemorate
the red coats. Right?
Great. So, one of the companies that you have brought in to talk about, Facebook.
Right, and Facebook stock hasn't been seeing too much red. I mean, it's been up, and away. And I think what I'm really going to key on here, in calling Facebook an aggressive growth stock is the most recent earnings report.
Okay.
So we know the company is a social media icon. It's the big place where everyone goes. It's a Zacks Rank 2, and it has that growth style score and value style score that I like, and you know that to be, Terry, A for growth and F for value.
A and F, that's right.
A and F. I like the A's and F's because I say that there's two types of investors, growth and value, and I want to see them looking for different things altogether. You don't want a value investor looking at a growth name and vice versa. That's when the market would be all, real screwy.
You make it sound so convoluted, but
I know,
it's really not.
Right. It's just things have to line up where they should. And I don't want value investors looking at my growth stocks because that means something's really wrong. So this most recent quarter was a massive beat. It was a beat on the top line, it was a beat on the bottom line, and the metrics all looked really good. We are closing in on 1 billion mobile viewers per day.
Oh.
So we're already past the 1 billion people looking at the site per day. We're approaching 1 billion just on the phones. So that's a big number. When that comes up, it'll be pretty great. But the real driver, I think, for the quarter was revenue, ad growth revenue. Was 31% quarter over quarter. Now that's gigantic sequential growth, and we're looking at a market that's weakening in some respects. This is what's really going to set this stock apart. If you delve in deeper to it, I think the year-over-year growth was 51% or 57%, something like that, in the 50s, which is over a long period of time. Obviously, you're going to have a little bit bigger there, but the sequential growth in ad revenue is what I'm really focusing in on. If we take a look at the stock here, we see it's going to be in that nifty 50 group, the forward earnings of about 50 times. But I still like it here. You can see that the stock jumped up after earnings. And again, the market has been rather weak here in the first month of 2016, and that has spilled over here into February. I do want to bring up this one last chart here. This is one of the best inventions at Zacks.com. It is the price and consensus chart. It shows us the price of the stock in black and the consensus estimate, per year in color-coded lines. There's also in addition to this chart here, we can see anytime the company has reported with these little arrows, they're the beats and misses. Anytime that there is a very large beat, there'll be a line beneath the arrow. So I think each segment of a line is a 10%, over the Zacks consensus estimate. The key here that I'm focusing in on is taking a look at the 2015 earning estimate line, which is a light blue. Would you call that a light blue, Terry?
Okay.
Okay. And then 2016, which is a brown line. Brownish, beigeish. So I guess the big difference here is that there's a big gap between 2015, 2016, and that implies significant earnings growth. We haven't seen that a lot in the prior years. There are some gaps, but then the next year is very close. As the next year estimates start to come in, they're very close to the last year. So there's a very small gap. Now that there's a very large gap, that tells me that there is big earnings growth expected. With this most recent reported quarter, I think it's looking at the potential for the stock to see an expansion in its multiple. And when we see that, that's an aggressive growth stock.
All right. Well, the SEO folks tell me that you have a comparable number of people who follow your videos here. Comparable to the number.
Yeah.
They
on
said
a daily basis, right?
Well, they said something about it's just unbelievable. So I don't know. I just assumed it meant that. But
0 or 1 billion. Probably closer to 0.
let's talk about HCA Holdings.
Yeah, HCA Holdings is the hospital stock. They used big in the news back in the 90s or so for the buying up all the hospitals. I think I saw a stale data piece when I was pulling this together. I didn't see the most recent thing, but I think in 2014 they had over 166 hospitals.
Wow.
So plenty of things out there, and people are not going to stop getting sick and going to the hospital, whether the stock market is moving up or down. So
Sure.
it's going to be in business. It is a Zacks Rank #1, and it is one of those rare times where you see growth, value, and momentum, all those 3 style scores being an A. Not
really something that you like all the time.
Not something that I really key in on, but when I see that everything looks good, then it's worth a deeper look, especially when it's a #1 and it's a strong name. And it has really weathered the storm as well. We can see that in the chart in just a minute. Most recent quarter was a very strong beat. 30 cents, 21% positive earnings surprise. We talk about a value play. This is trading at 11 times forward earnings versus 14 times for the industry. So I like that as well. So if we look at this chart here, especially as we see like mid-January, we see the stock really running up from about 62 to 72. That's a strong move, while the rest of the market was rather weak at that time.
Mm-hmm.
So obviously this is a stock that has weathered the storm, has produced solid earnings. I think it's a good one, especially given the circumstances we're in right now in the market.
All right. Own either one?
I do not.
All right. Check out more stock information, stock picks, stock picking strategies, and commentary, all on Zacks.com. If you're not there already watching this video, you can link to it all right off the homepage. Other interesting stuff there, too. With Brian, I'm Terry Ruffalo.